Have you ever wondered why so many people spend 30 years paying off a mortgage even though they make every payment on time? Today, I want to explain how the shred method works and why it has helped many homeowners potentially save years of payments and thousands in interest. First, let's talk about the problem. Most people focus on their monthly payment. The bank focuses on something else: interest. In the early years of a mortgage, a large portion of your payment goes toward interest, and only a small portion goes toward reducing the actual balance. That's why many homeowners are surprised when they look at their mortgage balance years later and realize it hasn't dropped as much as they expected. The shred method takes a different approach. Instead of focusing only on the monthly payment, it focuses on cash flow. The strategy uses specialized software along with a home equity line of credit, or HELOC, to create a customized plan based on your income, expenses, debts, and financial goals. Now, a HELOC by itself is just a financial tool. The real value comes from how it's used. Here's a simple example. Let's say the software determines that using a portion of your HELOC to make a principal reduction payment on your mortgage may be beneficial. That payment goes directly toward reducing the mortgage balance. Then, instead of letting your paycheck sit in a traditional checking account, your income is deposited into the HELOC. As money flows into the HELOC, it helps reduce the balance. As bills are paid throughout the month, funds are accessed as needed. The goal is to make every dollar work harder while reducing debt more efficiently. One thing many people don't realize is that HELOC interest is generally based on the average daily balance. The faster money flows back into the line, the lower the balance may be throughout the month. The shred method software constantly analyzes your situation and determines when it may make sense to deploy another principal reduction payment. That's why every plan is different. Someone earning $8,000 a month will likely have a different strategy than someone earning $15,000 a month. The software creates a plan based on your specific financial situation. Now, let's talk about some potential benefits. First, interest savings. When principal is reduced sooner, there may be less interest charged over time because interest is calculated on a lower balance. Second, faster debt payoff. Many homeowners are surprised when they see how much time may potentially be removed from their mortgage timeline by managing cash flow more efficiently. Third, greater financial awareness. The process helps people become more intentional with their money because they can clearly see how their income and spending impact their long-term goals. And fourth, flexibility. Unlike many traditional loan products, a HELOC is a revolving line of credit, which means funds may be available again if needed, subject to lender terms and available credit. Now, who is the best candidate? Generally, homeowners with equity in their property, stable income, and positive monthly cash flow tend to benefit the most from this type of strategy. If someone is struggling to pay monthly bills, the first priority should usually be improving their budget and cash flow before considering mortgage acceleration strategies. At Livai Financial, we don't believe in one-size-fits-all solutions. Before recommending anything, we look at your entire financial picture, including your income, expenses, debts, and goals. Sometimes the shred method makes sense, sometimes it doesn't. The goal is not to sell a program. The goal is to help you make informed financial decisions. If you'd like to see what the shred method could potentially do for your situation, we can run a personalized analysis using your actual numbers. You'll be able to see projected timelines, potential interest savings, and how the strategy may work based on your unique financial profile. Comment shred below or send me a direct message if you'd like a personalized analysis. I'm Fred Livai with Livai Financial. Thanks for watching, and I'll see you in the next video.